Now, Nigerian equities sustained a positive trend from Wednesday's session, backed by gains in the financial services stocks. Meanwhile, we're seeing the industrial index of the exchange lost over 7% in the first quarter of the year. So what does this quarter hold for stocks in the industrial goods space? Seun Arambada is a research analyst at Meristem Securities, and he joins me for that discussion. Thank you so much for your time on the show today, Seun. Let's look at first the performance of the industrial sector in the first quarter. What do you make of what we saw play out?
Thank you for having me, Kenneth. In terms of how the prices of stocks and the industrial goods have moved, I think nothing too surprising really, given how these prices have moved last year. And I think it reflects what has happened generally in the markets. We saw how the abundance of liquidity last year and the low yield in the fixed income market, sort of made the equities market more attractive. So we saw how that sort of spurred interest in ticker, and of course, we'll see much of that interest in quality counters and quality names like the Dangote Cements and the likes. So in the first quarter, we sort of saw a moderation in that momentum. Most analysts, projected that we would probably see a correction in the market, but the time frame to that correction is what most people didn't see coming. And what will support that correction is the uptick in yields in the fixed income markets, which is what we saw for most parts in Q1.
All right, but looking at the earnings, we saw Dangote Cement cross that $1 trillion naira mark, with their earnings, the full year earnings there. I'd like to get your assessment on what we saw from the key players in that space.
Yeah, so that performance for Dangote Cement was expected. In fact, we expected in our forecast, we expected the company to put out a revenue of about a little bit above 1 trillion, like what it did. So that didn't come as a surprise for us. Looking at how the company performed during the year, you recall in the second quarter of 2020, the company's performance was resilient, despite the fact that we had the lockdown in that period. So that didn't come as a surprise. So also you'll remember that the company had some waivers for its export, and with the Apapa terminal coming fully on board during the year, so maiden clinker dispatch to Senegal. So when you put all of that together and in that export in the first quarter, I mean, it's easy to see why the company, was able to come up with such revenue. Looking across other players as well, looking at Boa Cement, you also know that the northern market, which is the company's forte, was largely free from the lockdown. That also supported the players' performance, and exports as well. Exports to Nigerian Republic, they had some export waivers. So putting all of that together, strong local demand for cement and sustained exports. I think that justified the performance that we saw in the year.
All right, but let's look at your projections into the second quarter and activities that could lift, the volumes that we're seeing play out here. We're seeing the Africa Continental Free Trade Agreement, coming on board right now. We're also looking at, how the economic recovery is taking shape. I'd like you to look at that and speak to, what we can expect in the second quarter, and also how the companies in this space are also looking to expand their volumes and capacity.
Okay, so the second quarter for this year is, the prospects are good, in my opinion. One thing that I think would really drive performance is if we see the delay in the rainy season like we saw last year. We know that cement dispatch is not always best done during the rainy season. So if we see that kind of rain pattern that we saw last year, we see such again, that could support cement dispatch in the second quarter. Also, something that is worthy of looking into is, government's capital expenditure. We say that increased allocation to government capex is something that is going to drive cement players' performance in the coming days. So that's also a positive for the players. But also over the longer term, something that would really drive optimism is is the prospect for cement volumes that is stemming from alternative use of cement, that is for road construction. I think that's something that we expect to significantly impact performance going